Are you wondering where you should keep your money? Should it be a brokerage account or a bank account? And you're trying to figure out which one is the best place to keep it in? Well, if so, then this video is for you. Today on the Wealth Twin Show, we're talking about brokerage accounts versus bank accounts. And with that, Nadia, set it off.
Well, if you're looking at a brokerage account versus a bank account, you have to understand what the purpose of each account is, right? So, a brokerage account is best used if you're looking for investments that you want to invest your money in, like, say, stocks, ETFs, index funds, and you want to use it as a way to grow your money more than having it sitting in a savings account. When you're looking at a bank account, that's more used for everyday funding of your life, right? You're going to be paying bills from there. You're going to be buying groceries, whatever you need, and you use the debit card. That's what you should look at a bank account for. Now, don't get me wrong. There are some brokerage accounts that do allow you to do that. But if you're looking at a straight brokerage account versus a bank account, that's the main difference in the purpose of them.
Now, I would say another thing. I know this is a reason, one of the biggest reasons why people are debating between putting their money in a brokerage account versus a bank account is because of safety reasons, right?
Hmm.
So, with that, I want to let you know when it comes to a bank account, most people are familiar with FDIC insurance, right? Which means that in case that bank goes down for whatever reason, your money that you have deposited into that bank is actually insured up to $250,000, right? But did you know when it comes to a brokerage account, you do have some insurance on that as well? Now, that's with the SIPC, different from the FDIC, but your money is insured up to a certain point. So, in total, it'll be $500,000 in terms of securities plus cash. But in terms of just cash alone per account, it's up to $250,000. So, you don't really have to worry if that brokerage account goes down on account of the actual firm that you have the money in. If that firm is SIPC insured, then your money's protected up until $250,000.
Yeah, I think people need to understand the difference. If you invested in something and you lost money on that investment, you're not going to be insured for that. It is
Yeah,
only
no one's
if
gonna
that
save you from that.
no one's going to save you from that. But if that brokerage company goes down overnight, they lock up a specific amount of funds, right? To make sure they can make their customers whole up to that threshold, right? So don't think because you're invested in something, someone's going to pay you back if it loses money. There is risk with investing. So understand that insurance is not for that, right? Now, if I was looking at another difference between the two, I would say ease of access and accessibility and the functionality when it comes to a brokerage account versus a bank account. Now, if you look at it, a bank account is typically you come with a debit card and you can get a checking account or something like that. You can get your paycheck deposited into that bank account. It's a little different when it comes to a brokerage account. Usually you have to link your brokerage account to a bank account. Now, and then you move that money from your bank account into your brokerage account so you can start investing with that money. There are a lot of brokers right now that provide cash management accounts like Fidelity. And, Charles Schwab has a cash management system, but it's more of a sweep account and they have they have a checking account. But the thing is, you have to specifically use that or open that account instead of just opening a brokerage account there. If you use a cash management account, you do have check writing ability, you do get a debit card, but that is separate, that is open separately from a brokerage account. A pure brokerage account is only for you to invest money. Now, if you wanted to take money out of that investment account, you would have to sell your securities that you purchase or use the uninvested cash that you have in that account and move it back to your bank account. This is different from a bank account. You have access to the cash that's in that account. Once you have money deposited into there, you can use that money anytime you want.
Now, another reason why you might be debating between a brokerage account and a bank account is the potential for growth. Now, what do I mean by that? A lot of people put their money in savings account because some of them actually offer a very high interest rate, higher than the national average, around 4% right now. And those are those high yield savings accounts. However, if you want to grow your money on a long term, then you would look into a brokerage account. Why? Because you're investing. And when you invest, the reason why people do invest is to get a return in their money. So a brokerage account is what you need for that. You're not getting a chance to go higher than what the bank wants to give you on a bank account. Whereas you can pick and choose the investments in that you believe would actually lead you to get a higher growth on your money. It's only possible in a brokerage account. Now, if you look historically, right? when you look and you invest, let's say for average, a benchmark would be the S&P 500. Historically, the S&P 500 has returned an average annual return around 9%. Whereas when you do a bank account, you're barely beating inflation. So if your goal is to actually grow your money, then you might want to look into a brokerage account, because that's where the growth is going to happen and where you can actually be the one more in charge of an actual amount of growth that you can actually have on the money that you're putting in that account.
Now, even though the annual average return of the S&P 500 is around 9-10%, when you adjust for inflation, it's around 6.5 to 7%. But it's still higher than the average interest rate that you're getting paid in a bank account. Now, when I look at my bank account versus a brokerage account, I look at a brokerage account as a supercharged saving account, right? But the thing is, be aware. Do not put money in a brokerage account and think it's a savings account if you need that money in less than a year, I would say even 2 years, because of the risk of losing that money. With the higher return, you have higher risk of losing that money. So just keep that in mind. Don't think, oh, I just throw everything into this brokerage account. If you need the money, you may want to keep your principal safe, keeping it in a bank account, and getting a high yield savings account that has higher interest that will be paid on your savings. Okay?
Yeah, so yeah, this is one thing we have to make clear. Anytime you're investing, right, in any type of asset, there's always a risk that you can lose money,
Mm-hmm.
right? In a bank account, no, you're not investing in anything, so therefore it's a place to park your money. So therefore, you don't have to worry about that money being lost if you, especially if you need that money very soon. If you're looking to put your money and you want it to grow over a long period of time, and you understand that there is a risk in investing, but there are safer ways to do it, then yes, a brokerage account is the way to do that if you're looking to grow your money and accept some of the risk in turn for it.
Now, Nicole, let's talk about fees. Now, I will tell you right now, between the two, I think banks with their bank accounts are more flagrant with fees. Okay. I think right now there's a lot of competition between different brokers and they're looking to entice retail customers to come in. So they have either eliminated their fees on most of their products or made them pretty low. So there's no longer that high of a barrier for you to start investing for yourself, right? But when it comes to bank accounts, they are trying to get you every which way. You have to make sure you look at the fine print of the account that you open up and understand what fees they're going to charge you for. You can get charged fees for not having enough money or not having enough money in that account. If they, let's say they set a minimum requirement of how much money you should have at all times in that account, you can get hit with a fee. You can get hit with a fee for how many transactions you do within a month. You can get a hit with a fee for writing too many checks or just ordering your checkbook. There are a multitude of fees when it comes to bank accounts. And I think that's, if you're looking at fees, I think that's where brokerage accounts went out because a lot of the fees have been eliminated. So less fees equal more of your money being used for you.
Yeah. Now, when you say fees, I have to say too, brokerage accounts do have some fees that you're
They do.
just not going to get rid of. You're going to
Exactly.
have some that give you commission free trading and also very low fees in terms of what they're charging for expense ratios and things like that. But they have some tricky ways to charge you fees as well, right? Say if you have a problem with one of your trades and you want some help, actually help trading, you're going to pay a fee to actually talk to a person over the phone. So that's one type of fee you can have, right? I know that in Vanguard, they can give you a fee if you receive paper statements rather than doing electronic statements. So there's ways that they want to they want to lower your fees, but if you don't go and play the way that they want you to play and you need extra help or you want to do things that have been upgraded but yet you still wanting to do it the old way, like say get paper statements, like talk to a person on the phone, you will be paying a fee for that, right? And there's also different types of investments where you'll be charged a fee to get into those investments as well. So it's not that these brokerage accounts are fee free. They do have fees, but in terms of fees versus a regular bank account, yeah, there are probably more fees on a regular bank account than there are brokerage fees. So a bank account can be, if you have the wrong bank account, you could be charged a lot of fees like ATM fees and things like that.
Yeah, and I will, just because you brought up ATMs, if you have a brokerage account that provides you with a debit card, then most of the time in my experience, what the ones I have, you're not charged ATM fees because they don't have their own personal ATMs or a shop or a brick and mortar location that has an ATM present. So you're avoiding a lot of ATM fees by using any ATMs you find. So that's one thing, especially when I travel abroad. That's one of the good things that I look out to, those ATM fees. Now, if you're looking at it and we wanted to summarize this, looking at what you want to do with these accounts, a bank account I would look at for everyday purposes, unless it's like a cash management account. We have videos on that, or versus a brokerage account when you're looking to invest for the long term. And Nicole, do you have anything you want to add?
Yeah, I would say if you're looking at the real difference, it depends on how long you want your money in that account or how long you're willing to keep that money in account and a reason why you're saving that money. If you're saving that money for emergency funds, if you're saving that money for a big purchase that you know you're going to have or a big expense you know you're going to have within the next year or two, then maybe a bank account is better for you because you need that money to be safe. You're not trying to grow that money and you need that money to be accessible. Whereas if you know that you can actually put that money away, it is not going to affect you on your day to day, and you're willing to keep that money for a longer term, then maybe a brokerage account is better for you because that is the money that you can actually grow and benefit from compounding if you invest that money.
Now, understand, based on everything we said, there's nothing stopping you from having a bank account and a brokerage account. And guess what? You can open as many as you want. You can open as many bank accounts as you want, and you can open as many brokerage accounts as you want. It's all about how you want to manage them. But I think if you're looking at the two, like we said, different objectives for them, and it's different things you have to consider when opening them up. But if you understand that, nothing is stopping you from having both. And that's what we both do. Now, if you're new to investing and you want to learn more ways on how to grow your money and manage it, make sure you hit the link below to get on our free newsletter called The Wealth Pack. We teach you how to manage your money, how to invest, and we go into more detail than we can on YouTube. So click the link below. I think you'll like it.
Now, with that, guys, if you enjoyed this video, give these twins a thumbs up, share it with someone you care about, and we'll see you in the next one.